Hey, good morning, good afternoon, good evening, everybody. We're going to get to another video here real quick. I'm going to go over my trades today. I'm going to show you exactly which trades you could have taken. I missed a few trades with different opportunities. I was off the charts. But other than that, I just want to go over what I saw and how I viewed the market today during the New York session on the NQ. Let's get into it. Today was a wonderful day. Let's see if I can show a little bit of a screenshot how my day was today. All right, got some Apex accounts. I signed up for a couple new Apex accounts. So these are just challenges past 5 today. These are my take profit trader. So these are going to be daily payouts. And then here's my top steps. Right. So here's the last trade that I took today. It essentially had no drawdown. It was entered and then just ran, which is really good. So let's get to it. How I do everything goes back to the videos I've posted in the past. Very clear. I believe I do everything in a very clear, concise, and consistent way. And I like to look at structure. Structure is essentially order flow or where the big money's going. It has accumulation, manipulation, distribution phases in it. It has extensions, it has sweeps, it has liquidity grabs, it has all the fair value gaps, has everything that you want to see in the market, or every method that's tradable in the market. And if you trade a different way, I guarantee that we enter almost in the same spots and we target nearly the same areas. I might get there a different way. And so that's what, doing these videos, so I wanted to share them. So let's get into it right here real quick, right? Right side of my screen here is going to be just a higher time frame perspective. It's kind of a zoomed out view, if you will, right? This is going to be the 15-minute time frame, right? So each one of these candlesticks represents 15 minutes in time. You can see my candlesticks are a little bit different than other people's in colors. I customize them to be like this. I like them. I change them every once in a while, but kind of like the transparent ones or the black ones here are going to go bullish, and then the white ones are bearish. That's all it means. So you can see here on the 23rd of December, we had a nice little push up, right? Holds a little, then it continues, then it holds, then it goes sideways a little bit, drops a little bit, and then here we dropped today. So if I was just thinking in that term, right, today, going into today's New York session, we'd just be looking for short opportunities, right, unless something drastic changed. And for something drastic to change, I want the market to show me which direction it wants to go and then confirm it. Right? Because you have sweeps, you have fake outs, you have liquidity grabs, you have reversals, pivots, you have all those different ideas. And a lot of the time, big movements, they don't actually go in the direction when there's a one candlestick movement, right? A lot of the time you get these one candlestick movements and then it's because of a news event or something happened or a gap or whatever, but then the market kind of refills it. And just in my sense of understanding markets, right? If the market was to do something like this, so it's kind of holding and then it has a very aggressive move. This is some sort of movement and it probably has a catalyst, maybe like a high impact news event or Trump tweeting or something like that, right? Interest rates. But when the price pushes down, right? I view the market here as expensive. It became cheap. When the market pulls back as it does, right, it's becoming more expensive. So it's like it's asking the market if you want to sell more as it's going up or higher and higher, right? And then you'll get something like this. And if the sellers push price down, right, push price down, or the buyers don't want it from up here, right? There's multiple ways the market can move. But if the buyers are here and the sellers are here, price drops dramatically here and reapproaches the cheap area. And so if the market does something like this, it's showing me, hey, the sellers here, sold here, pushed it down at this point. But as soon as we became a little bit cheaper, right, price is not committing to the downside, which shows me, hey, there's a lack of sellers in this area here, right? So I assume price is going to become more expensive in the range from this level here to this high being broken. So you can consider this box here having like a second opportunity to go short if the sellers want it from here, because it's actually more expensive than it was here, right? If price pushes up and then comes down here and then starts to reverse again, that just shows me, hey, we're losing steam, right? I can more or less wait for a clear opportunity to target this level up here, right? And a lot of the times the market will do something like this, right? So the news event here was a massive drop. It drew in a lot of attention, but then it kind of like tripped a lot of people up and then failed to actually hold price, lower, and really good opportunities going long here. But that's how I view the market, right? Buyers and sellers, cheap versus expensive, right? Some people call it premium discount. But as price is pushing down here, right? Massive buyer move here. We got a big bullish candle here, right? I want to see, hey, buyers are coming in. Do buyers actually want to hold? Well, price pushed down, pushed up again aggressively, and then dropped. So it's showing me, hey, there's no buyers that are clearly wanting price here. It's safer for me to short. And so the areas that are safe for me to short are not necessarily looking at a pinpoint move here or a pinpoint move here. It's actually waiting for a price to roll over and then commit to the downside, right? Because the momentum and trend is going down. So my areas to look for shorts is somewhere around here. Right, this one obviously didn't go very far, but if I just hover my mouse right here and highlight somewhere here and then draw, extend it down here, this is 65 points, right? If you're doing say a one contract trade, well, 65 points is $1,300. That's a lot of money, right? Especially if you're doing multiple accounts, and that's only one contract. So there's a lot of opportunity to take trades here looking to go short. And so how I viewed the market was, we saw this massive push up on the open, right? I'm looking to carry the momentum, right? So I longed it to take out some previous pivot levels. And then as it reversed quickly here, I stayed out of the market and I was just waiting because, unlikely, you're unlikely to have such a massive reversal instantly. It kind of like loves to play around, right? So if the market pushes up here and then reverses on a dime, I'm like, okay, there was strong buyers here, strong sellers here. Give me a second just to like pause and see who's actually like winning, right? So sellers step in, buyers come in aggressively, and then the sellers dumped. So on this candle here, this candle closure, right? If I go to the left and just say this one here, I'm looking for shorts, and it looks like the buyers in this area are going to not hold or fail. I can look to target this low here, right? So this is going to be a really good opportunity for me to take a short. So let's just put this as a green. And so as of this candle here, I can then look for shorting opportunities. And what I look for is the price to fold over. There's different things I look for, but essentially I'm looking for sellers to fake out the buyers. I want to see the buyers step in in a strong fashion. And once they do, I want to see the sellers just come in and absolutely dominate. From there, I can then have almost a 95% chance that order flow is going to maintain until that target's hit, right? And I'm just looking for entries right there. So here we had price drop aggressively, push up, and you can see price low, high, low, high, low, high, low, high, right? It's showing me it's like, hey, price wants to go bearish, but when we get back to an area like this, right, we're seeing the buyers step back in. Buyers here, right? Price pushes up, step back in, fail. So this moment here, it's like buyers are holding price, getting higher and higher, right? Now this move here is a nice strong seller's momentum to show, hey, the sellers are here. Let's look for some short trades once we get some confirmation. And it's not like, I'm not like looking at trend lines, and I'm not looking at EMAs, and I'm not looking at anything to specifically tell me, hey, this is a good spot to enter. I'm looking at the buyers coming in and then the sellers taking control, and then I want confirmation, right? I want some levels to hold. And so a lot of people will put, hey, look, magic trend line, it breaks here. And if you put your sell position here and your high or your stop loss there and target here, right, you win. So awesome, right? You might have taken a trade here. That's one style of trading, right? We had this big sell movement from here to here. So from here to here is my range that I want to see the sellers either step back in and hold, or I'm looking for this high to get taken. Price pushes up, right? And here's a cool thing. So if you looked for the movement, you can look essentially for like an engulfing candle and then wait for another engulfing candle to get created. As long as you're in the direction of the trend, it does work quite well, right? As long as you have an open stop and you keep a little bit of breathing room, you can make a really high win rate. So here to here is my little range, right? Price pulls back. We see, look, here is a bullish candle that got engulfed by a bearish candle, right? But then immediately, look, there's no secondary engulfing candle. We take out the high, right? Then no engulfing, no engulfing. Oh, look, bullish candle engulfs by the bearish candle, right? So awesome. We could say, okay, here's a seller's range, right? We see that V-shaped recovery or V-shaped reaction. Price pushes up again, and then we have another bearish candle, right? So if you were just to enter here, target your level. Well, here's 39 points with a 13-point stop, so it's about a 3R, right? If I go tighten a bit, I can get it to 3R. So this trade here, 38 points. If you do the quick math, and we just bring up the handy dandy calculator, let's go 38 points, $20 a contract, right? This trade is $760. If you have 10 accounts, right, $7,600. It makes a difference when you have the availability of your account size, the scalability, right? And so you can see, hey, we have, right, a sweep, reaction, manipulation. Here's a sweep, here's a selling sweep, right? But the low doesn't fail, so order flow is still bullish. And then all of a sudden we have bearish order flow. So it's like, okay, you could enter there, but then look at this. Here's our target, right? Here, let me take this EMA off. I just use EMA just for visual just some like refreshment, right? So here's a really good entry. This is like the prime entry that I would take. It's beautiful, beautiful, beautiful. Let's look for engulfing trade or entries all the way to our target and see the likelihood of them working. Well, here's another engulfing. Take profit. A bullish candle followed by bearish. Here's an engulfing. Hits take profit. Here is an engulfing, right? That doesn't work, right? Oh, so you have one loss. Oh well. Here is an engulfing, right? That doesn't work. Then you sweep the high. Then you have, I think this is doji. Is this doji? Yeah, doji candle, right? You could say this is engulfing or not. If you say this is engulfing, great. Which it's pretty actually. It's a very nice candle. It is a buy to sell candle, right? So there's another win. Then we have a bullish to bearish candle here, so this is another engulfing, and then that's the amount of trades that you can take towards your target. So you have 1, 2, 3, 4, 5 wins and 2 losses. The wins, right, if you just add them up, they make a huge difference. So 38, let's go 36, 26, 26, oops, 24 and 24, 150 points. So 150 points, and you lost 8 and 11, so 131 points. This trade now, if you do one contract, well, this one trades 2,600. If you have 10, this is a $26,000 trade, right? Trade opportunity. When you have order flow and you have the right side of the market, right? The right institution, the right trade, the momentum, you have everything in alignment, right? It's so much easier to hit winning trades than, just willy-nilly trying to get a pinpoint stop loss and trying to guess the market and trying to do that. But it requires patience, because from this point here to this point here, right, your first entry is an hour and 15 minutes, almost 15 minutes. But that's assuming you waited for this 15-minute candle to close. That's actually saying, hey, this high to low to high here, and then to here, now you have to wait a little bit further. So from the start of the session to the first entry is 2.5 hours, right? How many people do you know that have 2.5 hours worth of patience, right, for a very high quality trade, high probability trade? Well, this trade you could do one and done for the week. You could do one and done for the month or quarter, and you're sitting very pretty, right? It's just about patience. From there, like I said, we got a failure to hold and commit down low. Right? So as price folds over, I'm actually assuming, hey, this high is probably going to get taken out, right? And look, it goes and gets taken out. Not before we sweep liquidity, we fold over, we have those engulfing movements all the way to target, right? Sell to buy, sell to buy, sell to buy, sell to buy, target hit, right? This, right, this right here is larger movements than this over here. So you have more chance of getting more profit here. And look at it, just ran. It didn't actually just like trickle back and forth. So if you just look for engulfing candlesticks within this leg here, right, you're sitting very, very pretty. Well, there's your first engulfing, and you could go really, really tight. The load doesn't fail, right? Order flow, everything is aligned. It's a beautiful trade, right? Let's go. This is not an engulfing. This is not engulfing. This is a 3 candle, right? Higher time frame. 1 time frame higher would be engulfing. Then 1 time frame higher, here's an engulfing. Then this is your next engulfing. And then this is your next. Is that your last? Nope, there's one more. Oh, sorry, 2 more. There's 1, and then there's actually no, that's it. So there's 3 up here, 4, but you can see sell to buy, right? Engulfing, sell to buy, engulfing, sell to buy, engulfing. Beautiful opportunities today. Every single day of the market, there's wonderful opportunities, right? Previous day, this is December 26th. This is Boxing Day or just after Christmas. Beautiful trading opportunities, right? Once you have alignment, everything is just so much easier. Right? Low to high, low to high, low to high, low to high, low. Look what we hit, right? Beautiful target. So all these engulfings, you could have gotten, you know, 50 points, 30 points, 50 points, 20 points, whatever the case may be. But what you're trying to do is say, hey, if the market is running from here to here, and that's 100 points, right? I don't want 100 points. I'm trying to take my cheese or my, 20 points. I'm trying to take just a little bit because I'm taking what the market's giving me, and I'm trading very safe, trading very high probability, right? These trades here, right? 5 out of 7 trades. You're sitting a very high win rate with a very good risk to reward, right? You only need one of these trades to make a huge difference in your life. And I hope I can help you do that, right? So like, subscribe, do all that fun stuff for the video. That's such a weird thing for me to say, but I appreciate you watching this video this far, and have a wonderful day. Message me or comment on this video if you have any questions, and we will chat with you again soon. Cheers.